Hi and welcome. Now that Ethereum price is finally over $3,000, for the first time in 80 days, it's about time to talk about what we should expect next and what analysts and experts think about the situation in general. So, according to the data provided by Cointelegraph Markets Pro and TradingView, the price of Ether did in fact experience a so-called sell the news sell-off shortly after London fork went live, but the buyers quickly rushed in and pushed its price back about $2,800, its highest level since June 7, and now Ether trades at a little bit over $3,000. Well-known Twitter analyst Rect Capital gave quite an interesting insight into Ether's price action. According to his chart, Ether needed to close about 2,714 to confirm a trend continuation. He said that Ether is now at one of its final major higher time frame resistances. Once Ether is able to break past this 2,770 resistance, there will be little resistance ahead until the all-time high of $4,400. According to another Twitter analyst, Spin Traders, we should keep an eye out for possible move to $2,600, while a break and close above $3,000 could lead to a rally to $3,300. Okay, and back to Ether versus Bitcoin. After a 13% rise in 2 days, Bitcoin's market capitalization surpassed $800 billion to reach its highest value in 80 days. During the same time frame, Ether accumulated a 45% gain in 2 weeks, placing the network's market capitalization at $340 billion. You might have heard a lot of conversations regarding how Ethereum is going to flip Bitcoin. However, data shows it's not going to happen anytime soon, and here's why. Comparing some of Ethereum's metrics could definitely shed some light on whether Ether's 58% discount is justified. The first step should be to measure the number of active addresses, excluding low amounts. As shown in this chart, Bitcoin has 6 million addresses worth $1,000 or higher, and 3.67 million have been created since 2020. And Ether has less than half at 2.7 million addresses with $1,000. Its growth has also been slower, with 2.4 million of those created since 2020. This matrix is 55% lower for Ether, and this corroborates the market capitalization gap. However, this analysis does not include how much large clients have invested. Although there is no good way to estimate this number, measuring cryptocurrency exchange-traded products could be a good proxy. According to the chart provided by Cointelegraph, Bitcoin dominates with $32.3 billion in assets under management, while Ether totals $11.7 billion. Grayscale GBTC plays a vital role in the discrepancy because its product was launched in September 2013. Meanwhile, Ether's first exchange-traded product came in October 2017, when the XBT provider Ether Tracker was launched. This difference partially explains why Ether's total is 64% lower than Bitcoin's. And we should also look at the futures markets data, which measure market participants' total number of contracts. Bitcoin futures open interest currently amounts to $14.2 billion, down from $27.7 billion peak on April 13. Binance Exchange leads with $3.4 billion, followed by FTX with another $2.3 billion. However, the open interest on Ether futures peaked about a month later at $10.8 billion, and the indicator currently stands at $7.6 billion. Therefore, it is 46% lower than Bitcoin's, which explains the valuation discount. Of course, it wouldn't be fair to say that an indicator has no downside, so there is no definitive valuation metric to determine whether a cryptocurrency is above or below its fair value. However, the three metrics analyzed suggest that Ethereum is not going to flip Bitcoin in the near future. And there was something good I wanted to say. Coinbase is good. It has just launched facilities for Apple Pay and says that soon it will be opening up for Google Pay. From yesterday, iPhone users will be able to purchase leading cryptocurrencies such as Bitcoin or Ether with a Visa or MasterCard debit card linked to Apple Pay. Isn't that great? And that was all for now. Stay positive. Bye.